From the University of Westminster, this is The Week Ahead with Dave Coker.
Hi guys, welcome. It's Sunday, March 21st. This is The Week Ahead and my name is Dave Coker. Let's see what's going on over the next 5 days. Events that may move the market, things you do need to know about. So key events that are happening. First of all, we've got Powell and Yellen are testifying to the House Financial Services Committee on Tuesday and the Senate Banking Committee on Wednesday. So we're going to get a lot of information about the state of the U.S. economy from their points of view. And there's an awful lot of Fed speak going on this week. There's too much to list. There's well over half a dozen of Fed officials speaking. Clarida, Quarles, Brainard, John Williams, the list goes on. So they're trying to get ahead of information regarding the U.S. economy. I suspect there's a deterioration, as we'll see when we get into the data, that they're trying to get ahead of just to reassure the markets and the people that there won't be any issues going forward. Next up, we've got the BIS Summit, the Bank of International Settlements, and they're talking about financial innovation in the digital era. So it'll be pretty interesting. Once again, Powell is speaking there. U.S. economic data, and that's Monday actually, Powell speaking there. U.S. economic data coming out. We've got durable goods orders, personal income spending. We've got GDP, of course. We've got unemployment, lots of good stuff and things that could potentially move the markets. U.S. equity market volatility is still a concern because we're seeing the 10-year note rise in yield. And of course, as the risk-free rate, as the 10-year note, as the return on that increases, the risk-free rate increases, stocks become less attractive, relatively, as an investment. So pay attention to that. That potentially could really start to blow up in a major way. And then we've got some Eurozone data coming out. So we're looking at PMI for the Eurozone, and in the UK, we're looking at jobs data. And surprisingly, in the UK, unemployment's going to remain stable. Inflation coming out on Wednesday for the UK, of course, that's going higher. It'll be a mixed bag this week. It's a lot of interesting stuff going on. All right, let's take a look at the markets. This is the S&P 500. And we're looking at 1 week performance. Once again, guys, you know by now how to read this. So bright red means a sharp decline. Bright green means a sharp gain over the past week. Interesting, we saw Facebook rise and Home Depot's moving up. There are some big losses though. And look at them over in the credit services. That's very curious. So Visa, MasterCard, PayPal, everyone's getting banged on in a major way. That's very, very fascinating overall. But this shows the state of the market over the past week. And then we've got year to date, the same presentation, the heat maps off the wonderful FinViz site. And again, you can see the big winners, the big losers so far over this year. Lower right-hand corner down in financial, we got the banks, the diversified banks, JP Morgan, Bank of America, Citibank, Wells Fargo, all doing really, really well. Berkshire Hathaway doing really well. And then in the upper right-hand side, we've got under consumer cyclical, Amazon, Tesla, burning off consumer defensive. Actually, some drops there, very surprising. Walmart getting beaten up in a major way. It's really interesting. So once again, guys, market's a mixed bag, but you do have to understand what's going on and where the money's going so you can ensure that you're going to make a profit in the markets. All right, guys, let's start out with the daily stuff. So Monday, March 22nd. At 1000 hours, 10 a.m., we've got existing home sales for February. And once again, no surprise here, we've talked about it before. What we're doing is we're looking at the change in the annualized return of, annualized number, I should say, of homes that are sold for the month. And we can see the forecast is 649, prior was 669, slight slowdown. Nothing extreme though. At 1100 hours, we've got 3-month and 6-month T-bills. Prior was 3 basis points on the 3-month, 5.5 or 55 basis points, I should say. I'm sorry, 5.5 basis points on the 6-month. Now, guys, I didn't want to show the actual yield curve, or probably the curve for those interest rates, as I did before. What I wanted to show you now is the entire U.S. yield curve. So I've gotten this off Guru Focus, wonderful website. And once again, guys, we can see here, taking a look, the way you read this, at the bottom, horizontally, we've got time. Vertically, we've got interest rates. And we can see U.S. short-term rates are incredibly low. effectively zero in real terms. And then on the right-hand side, you've got the long-term rate. Now, we're starting to see the 10-year and the 30-year and the 20-year as well. So the 10-year note, the 20-year note, and the 30-year bond all ticking up. 30 years approaching 2.5%, really stunning moves up there. And as we mentioned before, the 10-year, which is tied to a lot of consumer debt, is getting everybody's attention, or a lot of attention these days. But this shows the overall yield curve. And guys, one of the reasons I was touting banks so heavily was that as the yield curve steepens, in other words, as the spread between long-term interest rates and short-term interest rates becomes larger, it becomes more profitable for banks to lend money. They actually make more money in that regard. So really, really good data here, and really good indication of what's going on overall. And Tuesday, March 23rd, we start out by looking at new home sales month on month for February. Prior was 4.3, forecast to come in, prior was 4.3, forecast to come in with a contraction, 6.5% contraction in terms of home sales. The Red Book, and this is coming out month on month and year on year. We're getting both types there. And guys, when we take a look at the Red Book, what we're doing is we're getting an overall idea about U.S. economic performance from services and manufacturing. Prior was a negative 17.9 contraction month on month. We don't have a forecast. Year on year, looking a little bit better, but more importantly, it's the month on month performance that is troublesome. And we're not quite sure what the forecast is going to be there. We don't have it. Prior was at 8.5% change year on year. Wednesday, March 24th. We've got durable goods orders month on month for February. Prior was 3.4, forecast to come in literally at 0.8%. We're seeing a sharp slowdown there. And what we're doing there with core durable goods, I should say, is that we're taking a look at the new orders for manufactured goods. And what we're doing is we're trying to get a feeling for the manufacturing sector, number one, as well as what the consumer's up to. Are they ordering things? We should see durable goods orders increase then. So prior 3.4 forecast, 0.8% or 80 basis points. Not so good there. We've got services PMI coming out at 945. And I love to look at the Purchasing Managers Index in services. It gives us a good indication of what's going on in the oh so critical service part of the U.S. economy. Prior was 59.8, forecast to come in at 60.2. This is published every month by Market Economics. And what they do is they go out and survey over 400 CXO staff in private sector service companies. And what they're trying to do is get an idea about the relative level of business. Is it expanding or contracting? And at 1000 hours, we've got Fed Chair Jerome Powell testifying, and he's talking about the economic outlook and monetary policy actions to the Senate Joint Economic Committee. So it'll be really interesting. These come in two parts. If you haven't seen them before, definitely watch it. So in the first part, he'll give a prepared message, a prepared speech, more or less, and then the committee will follow up with questions and answers. And that's where the real information comes out. And it'll be really fascinating, not only to see what he answers, but I always like to look at the questions that he dodges. You can tell a lot by the topics he wants to stay away from. And the politicians, they're respectful, they're polite, but some of the questioning does get pretty intense, and it's actually pretty good, as I said, to watch what he stays away from. On Thursday, March 25th, oh, my animation. Thursday, March 25th, we've got US GDP quarter on quarter coming in for Q4. Prior was a 4.1% contraction, absolutely abysmal. Forecast to come in 4.1 expansion, 4.1% expansion. Nobody really has a clue there, though, guys. You look at the estimates from the street as well as government estimates. They're all over the place. At 0830 hours, we've got initial jobless claims coming in. Prior was 770,000. We don't have a forecast. Now, keep in mind, guys, this is interesting to us because these are people who are filing. They're newly unemployed. They're making their first claim for unemployment assistance in the States. 770,000 on a week. That's a huge number. And on Friday, March 26th at 0830 hours, we've got the goods trade balance for February coming in. Prior was 84.5 billion. That huge deficit in in trade. We don't have a forecast for it. And really what we're doing, again, just to make sure you're aware, we're looking at the difference between imported and exported goods. And America's been running these trade deficits chronically for decades. I'm very vocal about this. When you run a trade deficit like that, you're essentially exporting wealth. And what a surprise, life for ordinary Americans over the past 20 years or so, even a little bit further, has been getting worse. At 1000 hours, we got Michigan consumer expectations for March. Prior was 77.5. We don't have a forecast. I'm not sure what's up with admin. I'm going to talk to her. I should have this data. Regardless, what we're doing is we're looking at two components for the sentiment index, right? We're trying to understand what the consumer's view of current conditions is, and then what they expect going forward. And if it's higher, as if it increases, they expect better times ahead. It's that simple. I love the simple metrics, guys. You start to look at complicated stuff, good luck. Keep it simple, and you'll do well. All right, guys, that's it for the week ahead. Thank you for your time. I hope you have a safe and profitable week. Lots of good stuff going on. Check out Talking About Finance. Lots of fears about a bubble in the U.S. stock market. Of course, we don't know exactly where we are with that bubble. But if you buy companies that you're aware of, that you've read a great deal about, that you know the enterprise and you're comfortable paying, I never sell stocks. I very rarely sell stocks. And neither should you. So just invest for the long term, hold on, and you will make money. Once again, thanks for your time. My name's Dave Coker. Take care.